Hello, good day, guys. My name is Nick, technical analyst for Forex. Today, we shall be looking at the technical analysis on the currency pair, the Australian dollar to United States dollars. And as usual, we shall be first talking about fundamental analysis before we move right down ahead to technical analysis, which is purely what we're going to be seeing on the chart. AUD USD have failed to stick to its fresh yearly high at a 0.7540 zone, and the Australian retail sales have landed flat, but have outperformed the market consensus. And the DXY is scaling higher gradually on an expectation of a 50 bps interest rate hike. The Australian dollar pair has attracted some significant offers after failing to stick to its fresh yearly high at 0.7540. The asset is trading lower as the Australian Bureau of Statistics has reported stable retail sales, and the monthly retail sales for February have landed at 1.8% in line with the previous print, but have outperformed the preliminary estimate of 1%. Now, the Aussie has been performing stronger against the greenback this month amid rising commodities prices globally, and Australia, being a major exporter of base metals, has capitalized upon the recent rally in the base metals, which has helped the antipodium to generate significant cash flows. Meanwhile, the United States dollar index is moving towards the north gradually amid rising expectations of a tightening monetary policy by the Federal Reserve. Betting over 50 basis point interest rate hike is gaining momentum after various Fed policymakers cited the requirement of elevating the interest rates to counter the soaring inflation. It is worth noting that the Fed chair, Jerome Powell, has announced 7 interest rate hikes this year and has emphasized that the economy is strong enough to digest the aggressive interest rate elevation. And going forward, the U.S. non-farm payrolls NFP remain a key driver for the FX domain. This week, the street is expecting underperformance from the US NFP as it's likely to land at 475K against the February figure of 678K presumed. Now, focusing on what we're seeing on the chart, we have noticed that the AUD USD has been consolidating right from the 23rd of March down to today, 29th of March of a week. And what we have been noticing from this is pure consolidation within the area zone of 0.75567 and 0.74728. What we can notice from this is that a continuous push to the upside is most likely in the books, and a breakout of the most recent resistance zone will give way for a new resistance zone at the top. Now, having the confirmation of this from our 4 hours time frame, we have noticed that it's gradually building momentum, and this is looking out for a new zone, of course, at the 0.76 zone, most likely, and before a hold will happen for the AUD USD pair. Now, if we were to make an entry to this trade at this point, having our stop loss input at the most recent support zone at 0.74639, and allowing the trade to run up to 0.7577, or let's say about 0.76010 zone. We should be having nothing less than 100 pips from the trade, of course, which is good money. And that's our technical analysis on today's currency pair, the Australian dollar to United States dollars. We're back again with the S&P futures. S&P 500 has been climbing for the third straight day as Tesla has been leading, of course. And the US S&P 500 rose for third day on Monday as a sharp decline in shares of the Tesla has overshadowed weakness in energy and also the bank stocks, while Russia and Ukraine have been poised to hold their first face-to-face peace talks in more than 2 weeks. We have noticed that the electric car Tesla included has jumped about as 8.03% and was the biggest boost for the S&P 500 and Nasdaq after saying it will seek investors' approval to increase its number of shares to enable stock split, helping to leave the consumer discretionary index 2.67% as the best performing sector on the session. Now, the Smp Energy Index of 2.56% was the worst performing sector on the session after oil prices tumbled on the heels of a lockdown in China's financial hub, Shanghai, to curb a jump in COVID-19 infections that sparked demand worries. And financials were also among the weaker sectors of the session, due in part to a Morgan Stanley NYSE MS downgrade on US banks, which cited escalating risk and the likelihood that rate hikes by the Federal Reserve have already been priced in by the market. The S&P Bank Index shed about 0.99%, and the sell-off in the bond market has resumed on Monday, with short-dated yields hitting their highest since 2019, and the yield curve, as measured by the gap between 5 and 30-year yields, have briefly inverted for the first time since early 2006, raising concerns that the Federal Reserve's more aggressive monetary policy will dent economic growth and potentially cause a recession. Financials, so a lot of people bought those of, own those on the basis of this will do better in a higher rate environment. So I'm not surprised to see the financials back off relative to what is going on in the market. And of course, commodity names have rallied so high and so hard that it's not surprising to see these names back off. That is kind of what led the market down. But I still think the news for most of these commodity companies will be very, very good. The Dow Jones Industrial Average rose about 94.65 points, so let's say 0.27%, and the S&P 500 has gained 32.46 points, about 0.71% change, to 4575.52, and Nasdaq Composite has added 185.60 points, or let's say about 1.31% to 354.90. The S&P, we are able to rebound from declines earlier in the session, with the benchmark index falling as much as 0.6% at one point, and strong economic data and gains in beating down growth stocks have helped Wall Street's main indexes recover in recent days, even as the conflict between Russia and Ukraine continues, and a host of Federal Reserve policymakers have made hawkish comments about the path of interest rate hikes. So still, analysts notice that value stocks remain cheap relative to their growth counterparts, and Russell 1000 growth as value forward to, meanwhile, the Ukraine and Russia said their delegations will arrive in Turkey for peace talks that are expected to take place on Tuesday. A senior US official said Russian President Vladimir Putin did not appear ready to make compromises with Ukraine officials, also playing down the chances of a major breakthrough at the talks. And this most likely is going to have much more effect on the S&P 500 index. And on technical analysis, what we're seeing profusely is a push up to a most recent resistance zone, and continuation to the uptrend is most likely in the books, and it's going to be on that way for a very long time. And on the 4 hours time frame is just a new candle, fresh new candle out of the resistance zone of 4593.5 physics. So now we are looking for head to a new zone at the 47 zones most likely, and the final zone at the 4815 zone. So breakout from this point is already in the books, and if you were to make an entry at this point to this trade and let our trade run up to the zone, we're looking at about nothing less than 1,600 pips plus from that trade, which of course is good money. And that's our technical analysis on today's index, S&P 500. I remain your host, Nick. Bye for now.